What's going on? What's going on, people? Welcome to the Cosmic Training Academy, where we train, travel, trade, and as you can see, we educate. Um, I haven't made a video in a long time, so I just thought I'd come here and cut one and let's talk about what I love to talk about, which is the wheel strategy. This is an opportunity for me to show you guys. One of my wheels actually just closed, so I was they basically took my shares. So now I basically had I'm sitting on $600. So that's the reason why I want to take the time out to show you guys how we deal with getting back into um, another trade. Okay. All right. So check this out, guys. So now, as you like I said, we got $600, and now the object of the game is to figure out um, where we what can we trade to make a little bit of money. Now, keep in mind with the wheel strategy, we're always selling puts to get in. We're selling puts to get in, which means basically what we're trying to do is we're selling a contract to a buyer, and we're telling them that we will be willing to take something off their hands for a certain price by a certain date. Okay? So now the first thing we got to do is start finding some stock that is around the value of $6 per share. And since we're going to be getting 100 shares per contract, that means that'll be $600. Understand? Okay, follow me. So now we're going to go to the search engine up here, and we're going to look for stocks. I happen to know a list, and I've taken the liberty of writing some of them down. So let's go start going through some, and I'm going to take some notes as we do it and figure out who's going to pay us the most bang for our buck, and we're going to take that with the least amount of risk. Okay? All right. So first one I have on my list is UWM. Now, I've done a lot of research on a lot of these different stocks, so just so you know that this is not something I'm pulling out of my ass. These are ones that I look at the time. So, my fault. Sorry. UWM. Okay, so that one's 560. So we know it's going to cost 560 if we were to buy them exactly right now. But we're not buying them right now. We're looking to come put in a trade to right there. Okay, so let's hit a trade. We're going to trade options, right? All right, so now what's the next option? June 23rd. June 23rd, if we sold a put, as you can see, sell, put, okay? All right, and now what we're going to do is we're looking for, you can see the share price right here, just bounced to 558. And so so what we're going to do, since we're selling puts, now we're going to look at what they're going to pay us for taking it. Here's 550, $5, 450, nothing, nothing, nothing. So in order to take a contract that's executing and closing on June 23rd, which is right around the corner, so you can't really blame them. They're not giving you anything for taking that risk because they don't, it's not worth it for them. So I'll tell you what, let's look at June 30th. All right. Well, this changes things just a little bit. They are willing to give us $10 if we are willing to take it off their hands at $5.50. Well, here's the price right now, $5.57. It only got to move 7 cents before we end up having to take that. So we're not really taking it that much under the price that it's at right now. And we would get $10 for it, which essentially would mean we're getting it for $540. Because if you take the $10 off of that, then that would make it 540 that we actually getting it at that price at 540. Now, Is that worth it? If you really want to delve into it, just to give you an idea so we don't have to do it for the rest of them, I'm going to show you how we know whether we want to do something like that or not. So here we go. Now we could just look at UWM and let's take a look at it. We can see there's the daily, weekly, monthly, 3 months, 1 year. Okay. Now let's take a look. In the last week, where it's been down to 550, so we know it'll hit 550. Chances are it can probably touch 550. So you got to know that you're going to probably get taken. You're going to end up taking that contract. So which means that you'll be in possession of 100 shares, which means that you're going to need to get rid of those shares for more than 550, which technically you don't have to get it for more than 550. You got to get rid of them for more than 540 because you got $10 in cash they gave to you to take a contract. Okay, so 540 is what we get. We're going to get them for if we take it right now. But look at this. You have to take consideration. Look at this trajectory on this. Okay, so that's at what, 572. So you can imagine if it's popping up to 572 like that, and we got it for 540, and it looks like, look at that movement. Look at that movement. Pay attention to this kind of stuff, guys. This is why it's important to always go back and look at your time and see what the underlying asset is actually doing. And look at that. In the last month, it went up 62 cents. Which is 12.5% in the last month. That's pretty good, man. I mean, so it's looking good. It's looking like a really good prospect. In the last 3 months, let's see what it did in the last 3 months. Last 3 months, it went up 21% in the last 3 months. So, guys, that looks good. So it's been as low as 480. It might touch 550, but at least at 550, we'll get it at 5. We'll get $10 up front, and we can look forward to it probably popping up, maybe even up to $6, which means we'll make a $60 profit. Now, how long does it take to make that movement? I don't know. It looks like it took from May 25th. Let's go to April 25th, May, June 25th. But we're not even at June 25th, and so far we've moved up 62 cents. It could really be a good looking one. Let's put a note on that one and say $10 that we stand to gain. Okay. Put a note on there. $10. We stand to gain $10 if we take that one. Okay. Okay. So what else we got? Let's look at the next one. The next one that we have will be that I was looking at. It's actually P. Sorry, guys. It's actually P. Oh, Prospect Capital. PSEC, which what I was told about a long time ago, but I get in and out. But anyway, keep in mind that a lot of these are actually weekly strategies that I'm trying to show you guys, so you make a profit every week. So a lot of these will be weekly. Let's go down to trade. Trade options. Right now, this one, okay, so this one is once every month. But this is a monthly one. Okay. So come July the 21st, which is a month from now, we stand to make $10 if we hold it for 1 month. So that doesn't sound as good as the other one. And then also, let's go and look and see what Prospect Capital has done in the last month. It went down. Now, one could say, well, I want nothing to going down. Let's see. What has it done for 3 months? It's been going down for 3 months straight. Lost 7%. What about the year? 70 cents. It's lost 10% in the last year. So Prospect Capital really, by comparison to a to UWM, to me, I wouldn't take that over the last one. So I'm going to cross Prospect Capital out for this one because it doesn't beat these. Okay. So this is a strategy that I use to just try to figure out which one I'm going to get into. How about fuel cell? If you're into electric cars and you believe that technology is going to take over the world and all of this stuff, fuel cell is only 240, which means I could actually do 2 contracts. So keep in mind, since I got 600 up there, I can actually do 2 contracts. All right. Or I could do 1 contract of this and 1 contract of something else. So let's just take a look. Fuel cell's been going down. There's a pop right there, up to 8%. For the last 3 months, it's down 18%. So that's pretty heavy. 50 cents is a big loss on something that's so cheap. Okay? So you guys, you gotta really look at that and understand that that's a big loss, because if you got $200 worth and you lose $50, that's a big chunk of it. Okay, so that's what we don't need. In the last year, it lost $1.13. Fuel cell isn't looking good. But for the hell of it, let's look at the trade option. But see, this is where, even if they give me a lot of money, I don't know that I would even take it because it's not really necessarily worth it. Let's look at June 23rd. June 23rd. They're not even giving you anything because they really projecting that it's gonna, look at that. That means they believe it's already gonna fall. That's why they're not offering you no money. If they didn't think it was gonna fall, then they'd put some contracts out there. But yeah, they obviously think it's gonna, they obviously, or maybe they think it's actually gonna go up. So they're not offering any money on it going down. They're not scared. They're not buying any insurance. That's what it is. They actually think it's going to pop up higher than 2. They don't think it's going to go any lower. They don't think it's going to go down to $2. Let's put it that way. So they're not offering to pay any insurance to protect their interest on that. They don't will it. We are the people who are the liability. We suck up the liability. When you sell a put, you're taking liability off other people's hands. You're taking the headache off other people's hands. They're scared that if their stuff goes down too low, that they're going to lose too much money. So they want to pay somebody some insurance policy to take it off their hands. And that's what selling puts is really all about. You pay me a premium in order to take something off your hands if it get too low for you to hold it. So in this particular case, I don't like it. I don't like the way fuel cell's looking, and I actually had big hopes for fuel cell. I thought it'd do a lot better this year. Doesn't look like it's doing that good, and it's not enough money in it, in the premium for me. There's no premium in it, so obviously we're not going to touch that. Now let's go to the next one. The next one I have on my short list is MNKD. Okay, Mankind. All right. Mankind, as you can see, is a pharmaceutical company. It engages in development and commercializing therapeutic products and devices. Okay. So as you can see, also Mankind is only $4. So $4. Remember, I told you we were dealing with $600 that we had to spend right now. So let's look at it. Mankind. What does it do for the last week? Down 23 cents for the last month. Down 72 cents for the last 3 months. It's only down 4 cents. So not too bad. Last year, it's actually up 34 cents, up 9% in a year. So if you were to have to hold this for a year, you might be able to project that it's gonna keep going up. You can see the trajectory in the last 5 years right there, and you can see what it's done. It's been doing pretty good. I mean, for a low value stock, that's not bad. You know, sure, 110% in 5 years. 9% in the last year. So that's it's doing a pretty good average of probably about 20% a year. So if you believe that average will continue, as a biopharmaceutical company, no one can know. You can never know anything. Anybody telling you they know, they're lying. You don't know what's going to happen. But anyway, this company will be closed next month. You don't know. But anyway, so let's look what right now on the short term. Let's see, we got June 23rd. So they're doing monthlies, and for mankind on the monthly, June 23rd, which is coming up very soon, they're offering $5. If I take it off their hands at $4, it's not worth it for me. I can tell you right off the head. I don't even have to make any big assessments. It's $4. I already know it's going to hit $4. They're going to make me take it. Um, um, you know, mm, I wouldn't. I just wouldn't. I just wouldn't. You know, I could go out a little bit and take a look at June to hold it for another month. Excuse me. Oh, this is weekly. Hold it for another week. Still, it's the same thing. You hold it for 2 weeks, goes up to $10. But again, like I said, we are going to get exercised on that. They're gonna put that to us. It's only 2 cents away, so you got to know you're taking it. And now the question is, can you get rid of it for more than that? Do you believe you can? Now, with the trajectory of mankind, I believe you really can. I believe that you could possibly get rid of this for a higher price. So, um, because if you really look at what mankind came from, even today, um, it was at 410 today, down to 402, 422. This might be a good one to actually do. The reason why is because you're gonna get $10, which means you'll get it for really $3.90. That's how much you'll have in it, $3.90. And if you could sell it for $4.10, you'll make $20. And I have a good mind to think it'll hit $4.10. But again, we'll turn around and let's see what the option chain offers. It may not even offer like $4.10. It offers $4.50. So that means it has 50-cent increments. So that means we can't even sell it for $4.10 if we're doing it on the if we try to sell it on the option strategy, on a wheel strategy. I mean, we could put it up for $4.50 and try to sell a call at $4.50. But if nobody's even really doing it, so yeah, I mean, that's an option. It's an option. It's an option. It may be able to do that in tandem with another one, um, but for right now, let's take another look at the next thing. So again, that one, mankind, June 23rd was only $5. That's a weekly strategy. We'll write that down. $5. Okay. But again, we could turn around and then put a sell of sell a buy a sell a call on it next right after that. For $4.50. Somebody might do it. Who knows? Anyway, the next one is IMPP. And you guys leave a comment if there's anything that you want me to talk about when it comes down to this. I've been doing this trading thing for 6 years. And yeah, I mean, I don't do any YOLOing. I don't do any crazy trades. I don't throw. I start this off with just off side money, and slowly building up through little miniature accounts. According, they'll also have other little accounts and other stuff. But again, that's what it's all about. Slowly building up. the boring side of things. IMPP, Imperial Petroleum. What is Imperial Petroleum? It operates as a ship-owning company, provides petroleum products and crude oil, seaborne transportation services. So it's moving oil. Okay, so let's look at 1 week. 1 week down by 30 cents. 1 month up by 55 cents. Looks good. Up by $1.82. 80% in the past 3 months. They moving a lot of oil around. It gives you an idea. And this is out of Greece. That's interesting. So anyway, let's go to the trade. Let's see what they're talking about. Let's get down to breath. This is a weekly option. Like I said, a lot of these are going to be weekly options. We're going to sell puts. They're selling $4 puts at $7 premium. As you can see here, a $7 premium here. If you take it at $4, right now it's at $4.09. So you got a pretty good chance that it's going to hit you, and you're going to end up with that. The way it's looking right now, it's looking really good, because the thing about it is it's actually moving up, and I actually like the way that looks. Look at that trajectory on the last, look at that. Ain't no guarantee future past activity don't guarantee no future stuff. So that's the rule in trading. Can't guarantee that, so it's gonna keep going. Okay. But anyway, so that's that. um I don't know, what do you guys think? $7 we can take. It's gonna we're gonna pocket that $7, and we'll be done closing that in 2 days. So, or 3 days, if you will. And then, but almost more than likely, we're gonna get hit at that $4, and we're gonna end up getting that put to us. So we'll have 100 shares of IMPP, and then we'll have to turn around. We'll have to sell a call, and then let's just looking at it right now. These prices won't be the same, when we turn around. But if we went to sell a call on at 450, it doesn't look like anybody right now. There's no money in it. There's no money in it. No money in it. Selling cost. So, but I still like the way that looks. I'm gonna put that down to $7, and that's a weekly. So, the problem is there's no money in when we go to sell the call option. When we go to sell the call option, it just $1 maybe, and so that's the only problem with that. It may not, because it's far away at 450, it may not actually, so that's a distant maybe. So far, to me, still UWM is looking the best at a $10 premium. And we're gonna hurry up because this video is stretching out. How long we got? 20. I'm gonna give it 6 more minutes, and I'm gonna place a trade. All right, so here we go. We got two more. SWN. Let's see if we can knock it out the chart. Southwestern Energy. Let's see what we got. Southwestern Energy is at 540 right now. 1 week is up 0.56. 1 month is up almost 2%. 3 months, 13%. So, so again, you can see the trajectory yourself. It ain't hard to tell, right? So, 1 year, boom. Now, this where it's tricky. You see that? Look at that. Ooh. So, And the past year has been going down. So what we don't want to do right now is we don't want to get caught with anything, holding anything that's falling. And I'm gonna show, if I get a chance, I'm gonna show you guys an example of that, because I've got a couple of them that I'm holding that are falling. REM, AT&T, you know, and that's the risk you take in the wheel strategy. Anyway, but that's why if you look at most of these, and if I go back and show you, if you look at most of these, they actually do usually pay dividends. So I like to at least get something for it. Not only do I get premium, but I like to at least get a dividend for mine, if I can. Let's take this last look at rig, Transocean. It's like a lot of ocean stuff, a lot of transportation, a lot of logistics things right going on. $6 is what it's at right now. Obviously, our limit we said was $6, so we ain't buying for $6. We gotta buy for less than $6. Let's see what. Oh, let's go look and see what they did for the last month. Oh, they've stayed same. Sometimes this is pretty good when it stays the same. 1 year up to $2.30 to 63% in 1 year. 5 years down. So something to look at, guys. Let's see. No dividend doesn't look like. I don't know. Let's see. Unless they got offering a lot of premium, I don't think I'd touch it. Well, the premium is the same as the UWM premium. That's a $10 premium that you're getting paid. And this is a weekly option. You got a 67% chance of profit. Sometimes it's better to come down here and take the $2 one. And then do it again, but that would take us 5 weeks to get to $10. So, but we never get exercise, which we don't know if we would, but it would be harder for us to get stocks put to us, the shares put to us. But let's just say if we want to turn around and sell a call. Now again, like I said, this is not the real price it would be, but I like to sometimes scan and see if I want to turn around and sell a call after I get it. So that's $2 that if I wanted to sell a call for more than what I got it for, $6.50, that's $2 premium that I would receive. Okay, let's go up to the June 30th. $6.50, that's $8. So this rig could actually be a good one, because as you can see, not only did I June 23rd expiration, it's a $16. That is good. That's the best. Look at it. It's at $16. It was at 10. It says 16. Am I missing something? Oh, duh. Sorry, guys. I'm wondering, like, what is going on? How did it pop like that so fast? Selling a put. There it is. Okay. So, $10 right there. And then we could turn around and sell a call on the next week and probably get another $10 out of it. I like the way this looking. I'm going to take this one. I'm going to take this one, guys. Rig is looking good. Running out of space. Let's do the trade. Trading options. June 23rd. We're going to sell a put. $6. We're getting $11 for it. Trade. Let's take it. See if we can get it. We failed. Hey guys, Cozmik Training Academy, where we train, travel, and trade, man. Wish y'all guys the best. We feel that is how you do a breakdown on the wheel strategy. And we in for another trade. I'll let y'all know how it goes, man. I'll see y'all on the next one.